Footnote to add for Dragonfly, you got to remember that's during all this madness too.
Huh?
During all this tariff madness, it did that well.
So here, I'm gonna make a video and we're gonna post it on the site when it comes to any of the EAs or any of the memberships too. Every 3 months, I don't care what the title is, okay? But maybe it's 2 months, maybe it's 4 months, maybe it's 3 times in this year, 5 times in next year, but it kind of averages out, I feel like. Because again, I've been at this for a long time. It averages about once every 3-4 months, okay? Once a quarter, it feels like. Something catastrophic moves, right? It almost never fails. And maybe you stretched it 5 months this time, or you stretched it 4 months or 3 months this time. Almost always, whether it's, and I'll leave the EA topic alone for a second. I'll just say even in business, McDonald's and Chick-fil-A have bad quarters. They get to this point, this brand new restaurant opened, 14 Prime, and of course they're adapting things because they need to stay profitable or they can't stay open, okay? Being honest, they need to stay profitable or they can't stay open across the board. But they hit this period where you get this data now, and now you realize this is what those numbers actually look like. So you have to plan for that. So of course now they're releasing different standards in terms of seatings if you only have a party of 2, et cetera, et cetera. And of course all really upset. It's a very nice restaurant, et cetera, et cetera. But every business, I don't care if it's my YouTube problems this morning, broker problems yesterday, prop firm problems over the weekend. Every business, every aspect of trading, you're gonna hit these the what do they call that, the trough, right? You're gonna hit the up and down wave of your success pattern, no matter what. And if you don't find a way to mitigate that, stay the course and just buckle down, find the next solution, stick with itiveness, figure it outiveness, you're never gonna succeed, period, across the board. So yes, the Dragonfly does use it's not a grid-based system. It's smart technology, meaning it's adaptive to the things that are going on in the market. But now we'll talk about the EAs. Every one of those EAs have the capacity to work. The reason why most people cannot work with them is because they don't comprehend or process or plan for that one period where things are going to go crazy. So I want everyone to know that at some point in the next 3 months, if it's not Brexit, if it's not the Japanese what are the prime minister or whatever that person is, doing something. If it's not Trump, it's going to be Obama. And if it's not Obama, it's going to be the stocks. And if it's not the stocks, it's going to be Elon Musk. And if it's not that, it's going to be Brexit. If it's not that, it's going to be the election. If it's not that, it's going to be tariffs. If it's not whatever the title is, it does not matter. But something is going to happen in which you need to learn how to mitigate, manage, buckle down, and prepare. And there's entire books written about this. I've got like 4 on the shelves behind me. Hold on. Failure of risk management, right? All of the Monte Carlo based books talk about this, every single one of them. The signal and the noise, okay? There's quite a few of them. My favorite is Same as Ever. That's my favorite book on risk because it just shows you that really the whole purpose of that entire book is you can't plan for the part you don't know, right? You don't know what you don't know. That's the whole point of that entire book, but I digress. So now the only question is, how are you going to manage? How are you going to mitigate? What is your plan going to be? And of course, we have buttons on there, which I'll go over in the video, that says, hey, look, you get in 5 or 10% drawdown. You're going to do some market analysis. You have to have some amount of ownership, but do some market analysis and decide which one of the couple of options you have you're going to choose, and then route it out. So when the stuff happened with the tariffs, what I did was I didn't disable all trading. I think I went to like level 2, basically, to where it would like still manage everything, because USD CAD just got ugly. I don't know. I'm reasonably sure the drawdown didn't get beyond my parameter because I didn't get an alert for it, but it didn't get horrible. But yeah, it got ugly, right? Because there's nonsense going on. But we talk about that. And either way, if anybody else comes up with another system that can print 30% on the month, by all means, I'll buy it. Okay. I honestly will. If you can prove that actually it does it, I'll buy it. We can add MT4 to their download list. But let me fix the set file issue first, because for whatever reason, your guys' set file does not have all the pairs. And yeah, that's too much. I run a lot of pairs. Hold on, actually. Let me go here.
Yeah, I think the set file had like 7 pairs, if I remember, 7 or 8.
Okay. That trade has got like 30, 80, 50 bucks, 50, 80 bucks in profit and is going literally nowhere. Literally nowhere. Okay. Depending on So right now we're sitting in 5% drawdown, right? This account started with 20,000. Keep in mind there's fees and stuff too, but we'll have made 100%, but minus fees, we might be close. We might be at 99, give or take for sure.
I think in the last session I was watching last week, I think you mentioned the most drawdown you remember seeing was 30%.
I've been using this for many years. I also mirror this with US 30. So I do things a little bit differently. In Dragonfly, if you want to see 30%, especially for you, I would put this at like 25, okay? 25. So 0.01 per every 2,500. If you want to see never getting below 20% drawdown, okay, that kind of being the goal, put this at 2,500 and put the max pairs maybe at 6 or 5.
I see.
Okay.
The 0.01 is just above that. Okay. Yeah.
Remember, it's also only picking lot sizes based off of your free margin.
Right. What you mentioned before was probably the safer way.
It is the most conservative. You can go balance, you can go.
Most conservative, I should say, not safer, but you know what I mean.
Yeah, it is. But this right here is where it gets tricky. I have a vast amount of pairs in here, mostly because I wanted to have access to everything. Without fail, the only ones that ever had the biggest problems is JPY. But the problem is when you remove all JPY, you don't have the same gain because you need the diversity, right? So I've got Euro JPY and Chef are the only ones, but JPY, CAD JPY, Euro JPY, and NZD JPY.
I noticed you have some of each base on there.
Yes. Yes, 100%. There's all of these pairs. So you can do strategy, you can do candle, entries. Again, I talked about this. Smart scaling. Some of the stuff didn't work the way I wanted it to. But either way, I use this, okay? This is what I use. Figure if you have a $25,000, $30,000 account, you're printing a 6-figure income, okay? You're printing a 6-figure income reasonably safely. I always recommend off-risk capital, mostly just because I failed enough to know it's the one piece of the puzzle you need to make sure you don't fail, right? And I'm very irritated at having to explain to people that yes, it's required, because if you had a business, you have to have off-risk capital. You have to have operating capital. If you're an investor, you have to have off-risk capital. If you have a license, a certain series license, you have to have an X amount of net worth. You have to prove an X amount of income and have X amount of off-risk capital. You have to be able to prove you are okay aside from this, what you're doing, or you're not allowed to do it, right? I don't know how else to say that's part of real life. So when we talk about investing, people, and I know it's because YouTube and Facebook ads make everything look like it's a completely different world out there, but it's not. And if it was, the world wouldn't be what it is. So anyways, 20, 30,000, you're printing a 6-figure income, give or take. Okay, round that down to 75,000 after taxes, withdrawal fees, food bars messing up, and whatever else. That's literally how much you're printing without adding risk. It's like the first couple of months, maybe you're going a little bit heavier, you keep off risk capital, and what I do after I build up, I've 1x my account, I'll turn this up and I just let it go and I withdraw the gains on some accounts. So I just withdraw the gains. I turn this up and I'll withdraw the gains. Because by then I'm not risking anything. I don't even necessarily have to have a whole bunch of off-risk capital because I'm risking so little and I have so much in there that now I can kind of just print and it go on with my life, right? I don't have to worry about much. But it does literally every single thing you can think of times 10. Every single thing it has been thought about. The filters for the slippage and stuff. Sadly, bugs are not something we can avoid. If you see glitch ups, let us know. But some of that is just going to be market conditions. Like dragging the pair that you're on onto the chart, you'll see, especially in the live conditions, you'll see, hey, this is missing that the trail isn't activating, right? So if you don't like using the trail, I have it on for all settings. Kind of maximizes gains, but if you want the quicker in and out, you can go off on all the trails and don't trail any of the positions. None of them is actually a very profitable way to be. Turn this down real low. You have to have a buffer, because if not, if you don't have a buffer, oftentimes the ATR is too small, adding the spread and the slippage, that it won't even activate. So like the take profit won't drop kind of thing.
Have you tested it both ways? Just curious.
Yeah, well, before all the world went crazy, for the most part, especially in live market conditions, I ran it with the trailing stop off. Probably end of summer, I'll probably put with my trailing stop off. And right now, I guess I shouldn't say that because it depends on what happens with all these darn brokers, because now I have to re-update a whole bunch of things. So I guess we'll see how some of these other brokers function before I say that. Because LQD, what is it? JAFX, LQD, Hugo's Way, Plexi. I don't remember. The biggest ones in Hugo's Way, of course, that I've ran this on the most long term. AFX was not a contender. FX Glory not a contender because their spread is simply too high. And the way it bounces around is catastrophic. So the way it just jerks in and out of things is catastrophic because that spread will open up 100 times, like 10 times, and then nothing can work right. There's no coding you can put in that helps with that. So we've done as much as we can in terms of that, but something like AFX or which isn't even around, right? I don't know if they're around or not, I forget. And FX Glory, big no, hard no. The spread is vastly too high on everything literally except for USD CAD.
Ox as well.
I've never actually ran this on Ox, but I would assume Ox is fine. Because I did do Forex on Ox. Mostly the biggest issue I had with Ox was just the US 30, the way they did the US 30 spread and stuff. I don't think I had an issue with how they did the Forex, but I can't say.